All right, so Captain's Log start date 123. So cheesy. But ultimately, this is today's daily journal for our trade. So today, as usual, starting out with the options, right? I like to start in ThinkorSwim, although I'm going to place these trades ultimately in Robinhood just because I'm up against this PDT rule where I don't have any trades available here. So I'm going to switch over to Robinhood to do this. But ultimately, I'm looking at I like to pull up Thinkorswim. I'm a little bit more familiar with it than I am Robinhood. I'm still kind of learning that. So there might be an area where you can get the expected move in Robinhood. If there is, please put it in the comments. I'd love to know. But for me, I'm just grabbing it off of Thinkorswim. Right now, the expected move about 5 minutes after the market opens, somewhere around there is about plus or minus 2.34. I like to always round that up to three. So we're gonna go ahead and place the options trades first and hopefully get them filled, unlike yesterday where they didn't get filled at all. Um, and from there, I went ahead and placed it in Robinhood because I had trades available there, and ultimately it takes. And there we go. And so initially, I kind of actually it will take in a moment. For now, though, you're going to see where I try this range here, but it doesn't really work. So all I have for this is 0.13, right? That's the most I can make on this at this point, and that's at the close, and obviously that's not going to work out very well. So I'm going to go ahead and make an adjustment on this. I want to make sure to get that to where it makes sense. It's within a range that I don't think the market's going to pass within the first hour or two. And then also something that's a little bit higher, so that way we can make a little bit more money on it. So we try it again. I try it again. And we get those two. Now I kind of messed this up actually. I didn't run my calculations correctly. Um, but ultimately it ended up working out. I got 0.35. It's a lot better. I usually like 30 cents or more on these. I tend to find that it works out a little bit better. You're collecting a little bit more, a little bit faster, um, as opposed to having to wait around too long. So I like that because I prefer to take about 25% or so of that, and then just get out. So what I'm looking for on this really is going to be two iron condors making uh, about $5 a piece on each. Now with slippage and commissions, I like to bump that up a little bit to eight. So I'm looking for $16 altogether, right? And so we go ahead and do that. Now while that's getting filled, I went ahead and flipped over to TradingView, and set my levels, my gate, my 15-minute gate on a 5 minute um, chart. So 15 minutes in, and we can put our uh, line here, looking for the 20 EME to pass outside of that. So eventually I ended up setting an alert here, which is kind of nice. I worked with the alerts in TradingView. I'm still learning this program, but I put alerts here so that way I would know when it exits. It's actually almost kind of nice to have two alerts. One is when the market leaves the price, and then the other one when the EMA goes. Because when the market leaves the price, the EMA is going to follow. So if you're off doing something else, it'll give you the opportunity to kind of get yourself together to come in to this market, um, as opposed to the opposite, where if you do it just based on the EMA, then by the time you get in there, you may have missed the move that you wanted. So at least for me, I may have missed the move that I wanted. So um, anyways, but I also like to set these in ThinkorSwim. I have the text notifications on that, which is kind of nice. So I went ahead and just set some areas I might want to know about. Okay, great. Then I set some points of, sub resistance. The market was reaching its highs again today, or could have reached the highs again. Actually, spoiler alert, it actually goes beyond the highs, but it could have gone up. But at this point, I have absolutely no idea. It could go up, it could go down. All I'm really looking for are points where I could possibly have some resistance. Obviously up here at the top, potentially down here at the bottom, and some other areas in between where we could possibly see some support and resistance. So this is over on the 1 hour. So I'm just went ahead and marked all that off. And from there, check the news. Now, this typically I like doing a lot earlier in my day. I don't know why I waited so long to do this. And to be honest with you, I kind of got myself into a bit of trouble. Had there been some sort of report that dropped while I was doing this, that could have caused a major move on my option side of things. And so that could have really messed up the Iron Condor. So it's always good to check these before you do anything. Look at the news and get an idea as to what's going on in the market for the day. Sometimes um, with TradingView, uh, you have to scroll backwards, or because they only show you what's coming up. You have to flip back to see what's been going, there may have been a report released earlier in the day. So just kind of keep that in mind. But fortunately, that didn't happen today, and it worked out. Okay, back over here. Now, these trades were placed on Robinhood, which you can see over here. This is the active trade. Really, I was just looking for 16. Sometimes it has to go a little bit above that because of the bid-ask spread and also for slippage. So uh, this this point, I believe it does close out. Let's see what happens. Yep, there you go. And I set that automatically to do that in Robinhood, which I like doing. So what I'll do is, and I actually do it from my phone. There might be a way of doing it in the program itself, but I just think it's easier to do it there. So I go to my phone, I go ahead and close out um, of there, and by putting in where I want to sell it, where I want to buy it back at, and then once it hits that, hopefully hits that, it'll go ahead and close it out at that point. So closing it out through Robinhood. Okay. Now we are on to TopStep. So, TopStep strategies today. With this, a couple things. First of all, now that I've hit my 5 days in a row where I can withdraw from my account, I want to go ahead and open up a Combine and get that going, which is what I did today. So I have the Express account, then I also have the Combine account. So I have those two accounts going at the same time. Now, with the Express account, what I like doing is I like playing it a little bit more conservative. So what I'm going to do is I'm going to set a stop um, down here. So again, the 90 MA escapes the gate, goes straight up. I got my first flash of red. I'm looking to get in down here. Getting in at the price to me is very, very important. And I want to make sure that I am right at the bottom of this candle or pretty darn close to it. So I go ahead and I buy in there. And now here's where I set my stop loss. So I set my stop loss really over here, really at that high of that 5 minute candle, 15 minutes in. I like that. I've done some back testing, and it seems the probability seems pretty good for me on that. Now, again, trading is risky. I don't recommend that you copy my plan necessarily, but this is what works for me. So, went ahead and went ahead and just set the stop loss there. I was comfortable with that, but I'm really just looking for a retest on this. That's about it. So see what happens. So this moves up. Now we're going to move to the combine. And what I'm going to do is I'm going to do what's essentially the same thing. But what I'm going to do in the combine is I'm going to do this with two contracts instead of one because I want to build that combine as quickly as possible without blowing it up. So what I'm going to do is I'm just going to double the amount of contracts. So whatever I feel comfortable doing on the one that's already monetized. In the combine, I'm just going to go ahead and double it, but I'm looking for what's pretty darn close to the same result. So I'll go ahead and bring these in. Boom, it hits it there. Now it starts to come down, but again, I'm going to place that stop. I'm looking for that stop right down on top of that 15-minute, right, range, or 15 minutes into the market, and there you go. It never really gets down there. Pops back up. And now it starts to rise to the upside. I gave it just a little bit more than I gave the other ones. I want to see it, for this one, I wanted to see it come up to what essentially would be the top of this candle. So actually, this is back on the Express account here. So this is the Express account. Express account comes up. I said take profit at the top of that candle. And we get it. Boom. Express account, 220, 220. That's fine. Nice and conservative. I'm fine with that. I can build the account with that. Cool. Let's see what's going on over on the Combine account. Okay. So on the Combine account, I wanted to see this get a little bit higher. Okay. And what I was looking for is I was looking at that expected move. So what that means is that, I knew that it was going to be roughly like the expected move of the market was at least 2 points up from the open. Well, that puts me that put me somewhere around where we at right now, 607 38. I was looking for this to come up a little bit closer to 607.50, somewhere around there, and then close it out there. So let it get up a little bit further than what I had the funded account at, because this one's a combine. You know what I mean? I mean, look, if all things fall apart, it costs $50. It's not the end of the world to re-enter this thing. The other one is a little bit bigger of a deal because it takes so much time to build that up. So this, I went ahead and let it pop up, looking for it to get up there a little bit closer. And boom, we hit it. There we go. 594. Not too shabby. And again, doing this with two contracts. So what I did is I doubled it, but added just a little bit more risk. Felt comfortable with that, and wanted to see it break it a little bit, and then exit out. It worked out in this case. Won't always work out, but for me, it worked out in this case. Okay, so 594. Now, in the combine, I wanted to do one more trade, and that one more trade was going to be at the 20 EMA. So I wanted to see is I want to test this for a retest of the top. All right. So what I'm looking at here is I've got a 20 EMA, right? Essentially retest in a way. So it's going to come back down here and it's going to hit the 20 EMA. And when it does, I want to buy in somewhere down here. Okay. Now I'm looking for it to go back up and retest up here, which as you can see, it's about to, right? If it breaks down anywhere down here, I am out. Okay. I'm out. I mean, at this point, I didn't really want to, there's no need to hang around for that. Especially if it's up here and it comes back down, there's absolutely no way. In fact, what I ended up doing, which you're going to see, is that I ended up putting my stop up a little bit. So I moved it up. Once we got up into this range, there's no point in keeping it all the way down there. I felt comfortable with it. I wanted to see it hit the top of the previous wick. That's what I was looking for. I didn't know that it would. I thought maybe we could get there. I could possibly break through and then clear out the high finally. But I thought at least get to the top of that wick, and it goes further than that. That's great, but I didn't have to worry about it. Plus, that would put me up positive 425, which I was totally fine with. And looking at that, I put my stop just at the bottom of it. I figured, hey, I'm already up 593. I might as well go ahead and just, if it comes down, I'll take a little bit of profit at that, like 37.50, a nice little mental win, not the end of the world. And then if it pops up, I'll take that 425 on the way up. And what do we get? Boom, it hits it, right? So now, in one day on the combine, I'm at 1016. Not a bad day. So with this, what I was really looking at is I was curious to see, and what I was testing was whether or not this 20 EMA, as it can be a point of reversal, if it's better just to kind of take one off of there as opposed to messing around over here. Because the stop in this case would be pretty much the break of down here, right? If it comes down here, passes this and closes, then you definitely would be out of this thing, right? As opposed to having to come all the way down here and be out of it. So the question for me was, is this better to take it here with a little bit faster continuation, which in this case is exactly what happened, or not? The answer to that really remains to be seen. This, in the back test that I have done, letting the 20 EMA escape, and then and then from there, waiting for it to flash red, getting in down here, and then taking it at least for a retest. Probability of that from my own experience has been pretty good. Now it doesn't mean it's going to work every time. It could very well come down here and and stop you out. But for me, the probability has been pretty good with that. This over here off the 20 EMA, I know some people on YouTube talk about it. For me, it's one of these things where it kind of I wanted to just try it, and I figured the combine's the one to do it with. There's absolutely no way I'm going to try this with my funded account because, can go conservative for me, go conservative with the funded accounts, and then build up the combines as quickly as you can, right? And I think that does seem to be a good strategy. So that's all today. Ultimately, what ends up happening is that the market starts ripping upwards, and it closed really, really high, which is fine. I'm just looking for the retest. But 10, 16, 60 on the combine and a couple $100 on the Express account. I'm good with that. For me, that's a great day. Thanks so much for watching this. I hopefully got some insight over that. Make sure to leave some comments as to any thing that you see, suggestions, or anything you want to talk about. Don't forget to like and also subscribe. And I will see you on the next one.